Welcome back to my portfolio, everyone. And in this video, we're going over the 4 dividend growth stocks I bought today. The NASDAQ is finally in the red. Over the past 2 days, we've seen a sell-off, and the NASDAQ is down over 7% in the past 2 trading days, which could make a nice buying opportunity. Over the past year, we've seen the NASDAQ run up, and it's up over 43% in the past 12 months, and that includes the 30% decline we saw in the month of March. From March lows, the NASDAQ has climbed over 64%. This index has been on fire. So it's nice to see a slight sell-off over the past couple days because it's led to some nice buying opportunities. So I've added to 4 of my positions in my dividend growth portfolio. So I have a dividend growth portfolio valued over $56,000, and what I invest in is strong dividend paying companies that have a history of growing their dividend each and every year. And I have a combination of low yield, high growth stocks, and of course I have some high yield, slower growth stocks in here as well. You can see here I have a combination of companies from various sectors of the market. My top companies, of course, that are in the green are, of course, these tech sector companies, which have been on fire. Then I also have some financials, consumer companies, and some healthcare companies and utilities. So I have a very diversified portfolio of 20 different holdings in various sectors of the market. One consistent thing throughout all of these holdings is that they all pay a dividend that grows each and every year. And in this video, I'm going to go over the 4 companies that I bought more of today. I added to my existing position in each of these 4 companies because I thought now is a great opportunity to jump in, accumulate a couple more shares during this slight sell-off in the market. The first stock I bought today was Visa. As you may know, everyone, I am the Gen Z investor, and every single day on this channel, we talk about different stocks you can buy, overall stock market performance, and any other big stock market news and headlines. And today, because we've seen that market crash over 7% in a matter of 2 days, I have been buyer. I like when other people sell because that gives me a better opportunity to jump into these strong companies at lower prices. And that's exactly what I did today. I contributed a couple $1,000s into my portfolio, and I made 4 different purchases of companies that I already own. I added to my existing positions during this slight decline. The first one I added to was ticker symbol V, or Visa. Around $203 a share right now. Over the past 5 days, you can see it has seen a nice decline, which is make this a nice opportunity to get in. This company has been on fire. Over the past 12 months, it is up 16%. And over the past 5 years, it is up close to 200% with share price appreciation. They are a dividend paying company. This is, of course, a low yield, high growth stock with a current yield of only 0.57%. And this company is absolutely massive with a market cap of $444 billion. If we take a look, Visa has been attractive because they've done a great job of outperforming the overall market. If we include their dividend reinvestment, their return over the past 5 years is around 205%, more than doubling the performance of the overall market, which has returned just 99%. And this is a company that I believe will continue to outperform the market. If you take a look, analysts are expecting a 14% on average earnings growth over the next 3 years. And you can see here, top line revenue and estimated earnings is expected to grow over the next 3 to 4 years. And Visa has some of the most beautiful financial statements there are in the market today. This company has extremely high profit margins. And when you're looking for dividend companies, especially dividend growth companies who you want their dividend to grow each and every year, you need companies that bring in income. You need the company to grow income each and every year so they can afford to grow that dividend each and every year. And Visa is a company that does just that. If we take a look at total revenue over the past 5 years, a beautiful, consistent upward trend year over year, which is incredible to see. And if we take a look at their past 12 months, they've brought in $22.8 billion of total revenue. Meanwhile, their total net income was over $11.7 billion. They have extremely high profit margins. They have a profit margin of around 50%, which is absolutely incredible. This is a company that operates in a sector of the market that I believe is only going to grow in demand as we continue to shift to a more technology-based and online digital society. And I think Visa is going to do great continuously over the next 5, 10 plus years. And this is a holding I plan to hold for the extreme long term. Like I said, they do pay out a dividend. I only invest in dividend paying companies. Current yield very small, but they still pay out that dividend, so I'm still getting cash flow back into my portfolio of 0.57%. Payout ratio of just under 24% of earnings, extremely low, and they have a 5-year dividend growth rate of over 20%. So that dividend, although the starting yield is extremely low, that dividend is growing at a rapid rate each and every year, which makes up for that low starting yield. And if we take a look at their dividend safety score, currently ranked 99, the safest dividend safety score possible. So of course this yield is extremely low, but that dividend safety score is what I'm looking for right now. I like investing in companies, even during this time of a little bit of market uncertainty with how the economy is going to recover. I find stability in owning companies that are paying out very, very safe dividends that is very unlikely to be cut anytime soon. The second stock that I added to my portfolio today, I added to my existing position, was another massive company, and that was Microsoft. Ticker symbol MSFT. Because of the growth of this company and the growth I believe in this company over the next 10 plus years, I think they will continue to dominate the market. The potential to get the deal done with TikTok is also very attractive to me. I've talked about that many times on this channel, and I believe if they are part of the team that acquires the TikTok's US operations, I think it just expands Microsoft into a whole different sector of the market that they haven't even tapped into just yet, leading to a lot of growth potential. You can see here Microsoft as well, peaking at around $232 a share, has seen a decline to around $211. You can see here on the 52-week range, no longer being traded directly at that all-time high, which makes this kind of an attractive position for me at this current price point. They're another company that's done beautiful with regard to their income statement. Massive growth in revenue year over year, which is incredible to even think of. And this company has brought in $143 billion of total revenue in the past 12 months. It is the second largest company in the S&P, and I like adding to these companies when I see a decline because these are holdings I plan on never selling. They do pay out a dividend of 0.94%, payout ratio of just over 31.6%, and they've done a beautiful job of growing that dividend at over 10% per year over the past 5 years. And once again, similar to Visa, a 99 dividend safety rating, extremely safe dividend. This is a dividend where I'm not worried about it being cut, suspended, or reduced anytime soon. I believe they have the fundamentals to pay that dividend and grow it year over year at that 10% average for long into the future. That was the second stock I added to this week. The third stock I've added to, I actually discussed in one of my previous videos where I went over some of the most undervalued companies on the market today, and that is Bank of America Corporation. Currently around 26.37, ticker symbol BAC, I believe to be undervalued at their current price point. We looked over Morningstar report in that previous video, and Warren Buffett has been buying the stock. Warren Buffett is famously known for buying $1 worth of value and only paying 66 cents. He likes getting value from his investments. He likes buying companies who are undervalued or at an excellent price. And I think Bank of America is there right now. Buffett actually sold out of other financial institutions and has been adding to Bank of America. So I believe he knows something we don't. He believes in this company more than the others over the long term. So I'm following in his footsteps and getting more Bank of America shares into my portfolio. Down around 5% over the past 1 year and has seen a little bit of a decline over the past 1 month as well. So we're going to take a look at Bank of America. They are a higher yielding stock, so this is not a low yield, high growth stock. This is in the middle between a medium yield at around 2.8% right now, sustainable payout ratio of only 46%, and they've been growing that dividend for 7 consecutive years. So Bank of America is interesting. Of course, the entire financial sector has been hit extremely hard by this pandemic. There was a lot of uncertainty with regard to dividend payments. Bank of America was able to pass the Fed's stress test. They are eligible to maintain their dividend payment at their current rate. They haven't suspended it yet. I don't think they will, and I believe they will continue to pay out their consistent dividend year over year. And I think there's a lot of value with this company at their current price point, so I did add to my existing position and added around 30 shares of the company. Dividend safety score of around 55. I think Bank of America, of course, does have a borderline safe dividend, but I think over the short term, their dividend is safe. And for the odd chance that it does get reduced, I will not be selling. This is a company I believe will continue to operate long into the future, and I believe they will raise that dividend back up to previous levels. The fourth and final stock I bought into today, I added to my position, was the Dividend King Lowe. $156 a share right now. You can see here over the past 5 days, shares have peaked around $171 a share, which was their 52-week high. we've seen a decline of over $14 a share, a massive sell-off over the past 2 days, and that is why I added to my existing Lowe's position. This is a dividend king. They've operated for an extremely long period of time. Over the past 10 years, the stock is up over 635%, and this is a company where their sector of the market, they really only have one main competitor in Home Depot for the different services they provide, and I actually do own Home Depot in my portfolio as well. So this is a brand, a retailer that I believe is not going out of business anytime soon. I believe the customers they serve will always want to go in person to pick out their products at a physical location. And I do believe this is a company that is positioned very well to sustain long-term growth and operations. And market cap at over $122 billion, this is another mega cap company that I've added to my existing position. And if we take a look at that dividend, a 1.5% dividend yield, this is a dividend king, and their payout ratio is still extremely sustainable at only 28% of earnings. And they've been growing their dividend for over 50 years. This is incorrect on Seeking Alpha. Lowe's is a dividend king, and they've still maintained a massive dividend growth rate of over 20% averaged over the past 5 years, which is absolutely incredible to even think about. And with regard to their dividend safety score, currently ranked 93, so a very, very safe dividend that is extremely unlikely to be cut anytime soon. Those were the 4 dividend growth stocks. I've added more to my position this week. I've bought more of those companies today during this market sell-off. I believe these are extremely solid long-term holds. I do not plan on selling any of these companies anytime soon. I plan on holding them in my portfolio, watching them grow year over year, and I do believe my overall portfolio will see nice returns in the long run. So thank you for watching, everyone. I am the Gen Z Investor, and I will see you in tomorrow's video.